Good afternoon, guys. What's going on? Welcome back. Welcome to the new 15% corporate tax rate, down from Biden's proposed 28% corporate tax rate. I'll tell you what, 28 and 15 are two very different numbers. So, markets kind of like that. So, if we look today, where am I? There it is. If we look today, intraday, you can see some of that, right? You can see some of that. And whether or not the markets really care about what the corporate tax rate is under a Biden presidency is up in the air. I think we've talked about taxes in the past, and I've mentioned that even if taxes go up, it's not like people all of a sudden are going to exit the market, and especially market participants that would be taxed more. It's not like that would stop their buybacks. They were already doing buybacks under a proposed 28% corporate tax rate. Pretty sure they didn't care then. Obviously, they care about in terms of no one wants to pay more in taxes, but it's not as if all of a sudden markets are no longer going to go up, right? And so those are different things. And so I thought that was an interesting sort of shift. And I sort of talked about it this morning that Biden is the medium, right? He will compromise, and this is our first compromise, I would say. Pretty, they said he's still looking to go to 28, but at least a minimum of 15, specifically targeting those companies that are able to dodge federal taxes every year, which are mostly tech companies because of the way they have write-offs, due to the way they invest back in themselves. Obviously, things like Amazon create a shit ton of jobs, and so when we talk about Amazon not paying federal taxes, I mean, it is a different story when they create a lot of jobs. This is the same thing with things like Tesla. I think Bezos has complained in the past. Why does Tesla all of a sudden for their factories get tax write-offs, and then we don't? And then it's like, well, because Tesla created a ton of jobs, and so those are people going to pay taxes anyway. So these sort of discussions always end up into some weird loophole. I do find it very intriguing that willing to go to 15. When it comes to people such as myself that want to have a little bit more progressive tax sort of maybe rules and normalcy, I think it should be higher for corporate. I mean, it makes more sense. They make a lot more money, and it doesn't affect them the same way as taxing people so much more will, and they don't even pay how much a individual pays, right? I do find it a little strange that he's willing to go back, but for markets, we look at it in terms of the market view, they're okay with it. And so we saw some bid come there. S&P closed about 36 basis points down. Dow was completely break even. Again, we looked at banks and energy. Energy was doing quite well. So basically, completely break even on the Dow. Nasdaq obviously had a little bit rougher day, down 1%. A lot of this coming from the volatility from what's happening with the meme tickers. Now, it doesn't really so much matter that they're not, whether they're Nasdaq tickers or not. Nasdaq is always more volatile with tech, and so we did see a lot of that get impacted. Everything opened lower. Everything stayed about the same price. Besides going bid on the more value side, which if we do take a look, you take a look at things like energy. It's not many points, but it's a big difference between losing points, is it not? Right, continuing a trend, putting points on, and so when we look at the overall market, we're still really just trading flat, trying to get through some of the meme tickers, and let's just take a look at AMC real quick. In terms of finishing the day, we still had this inside day overall. Whether or not, I mean, let's just put it this way: they just did an offering today and literally came out and said, "Don't buy it." That's literally what AMC came out and said. They offered stock and then said, "Don't buy it." The direct quote is, "Don't buy it." And guess what? Everyone bought it. Yes, it was down 18%. Does that number really mean anything? It was up 95% yesterday. It's up like it doesn't matter, right? It doesn't matter. It's more about the look, the feel, and people bought it anyway. After hours is going bid right now, up 4%. We obviously still have a lot of life left in the meme economy, the meme stocks. We've had them since January. They haven't gone anywhere. They slowed down. Where does this go from here, right? And that's been the question. So tomorrow, we're really looking for I really want to look for some answers to what exactly, do we have left in the tank? Obviously, you can only buy so much. Some of this does come back to how do the option markets work and how does the flow work from other equities. So right now we see this market. So when we look at these sort of the meme stocks over the last 2 weeks, when we look at the market's been pretty mellow, hasn't done much. A lot of action has been sort of attentive on those sort of the meme stocks that we look at. Once that goes away and dissipates, right, and we start to see some sort of pickup in the overall market, it could cause a bit of an outflow from those, right? As soon as this is where I bring up the mega cap dynamic, is that as soon as mega caps, for instance, catch some bid here, if they do, all right, when you look at Apple, it does not look good over here, but it's still been holding this level mellow for a while. It's a nice low, right? If these start to catch bid, they are a growth option that make a little bit more sense, right? They make more sense than they make 100 times more sense than the meme stocks because they have more than just the right now, right? They have this continued sort of pursuit, and they're always going to continue to grow. And so these are big differences, and we do see that most demand is still in the mega cap range besides the most volatile tickers. And so, we'll see tomorrow. It looks like they get some more room. You look around, you see that more tickers are picking up. Yes, some came down a little bit more than others today, but it's still holding value. It's still up a significant percent when if you put put them all together for an average. They are still up a significant amount, even from last year. That's the scary part. That's the scary part. GME, listen, GME's not even at its high. AMC's like twice the high over here, right? Guess what though? It's still up. It's a shit ton. That's 26% since last year. More than that. There you go. Look at it from last year. GME's up about 6,200%, right? Yeah, it still has the value. And so this is again that weird spot where these things are still holding value. So this is that sort of point where it comes down to, are these going to hold? Is it going to hold the value up here? And what does that mean for the market, right? I think it does come into, I showed the graph earlier of when you pull up Zoom versus AMC here, just to make this point again. Oh, where is it? Oh, it was there. Okay. When you look at this graph, this chart, this is Zoom compared to AMC here, right? This orange line is Zoom. When you start to compare these kind of ideas, now Zoom put a ton of points on during COVID, right? It was very much a COVID baby. COVID baby. When you put this into perspective, right, you start to think about it a little differently. Now, Zoom has held its value, right? It's held its value. It's still up 316% if we look from this point last year. And so this is where the question starts to come, and we've seen this with big tech companies, is that they will put a ton of points on in a very rapid amount of time and hold it. For instance, mega caps since 2020 have slowed down, right? We've seen Amazon trade flat for almost 6 months now, but it put a ton of points on. Apple doubled in value during 2020. It's traded flat since then, but it's still doubled in 2020. It's held that value. What are we looking at on these tickers here? When we think about it in terms of monetary value, it's a very small amount. These are not, we're not talking about that much money, right? And that's where it's always funny when we talk about the GME thing and how all the cultist people are talking about how this is the battleground and this is where, Wall Street dies and how we're having a change of guard. It's a very small amount of money, right? It's such a finite amount of money, it doesn't matter. But that actually lends to it holding value a little bit here. If it does, then that doesn't introduce volatility. If these prices don't come down and gets to hold, which we'll be able to see through some technical processes, then that means the market can continue on its way and doesn't have any effect. What we saw before, which I brought up this morning, is that when you look at the spot VIX from back in that time period, right in here, this is the drop. This spike right here on the VIX is the drop. It was a 62% gain in fucking like 2 hours, right? That is significant in terms of volatility and really fluctuates everything that we look at. We don't see that over here. We don't see it over here. And I want to mention again, you would see that even though the VIX right now is not very well sort of situated and the math is pretty much off. The correlation sucks. We can't use it for anything, but it would still spike very high through here if this January sort of phenomenon was going to happen again, which we're getting the sort of one side of it, which is the bid part, but where's the drop, right? We're not seeing that in terms of volatility yet. It wasn't immediate over here either, but we did get some signs of it. I think it's important because, again, when you think about where we are in the market, it doesn't take much to affect the movement and affect sort of the mentality people have, especially for those traders that are just coming back to the equity market that came from crypto. They're jumping into that wild ride. If we don't have a more stable sort of trend to give back, right, then it's hard for people to stay, right? And you have to continue to change up what you're doing. And so it is critical in a couple different ways, and we want to be aware of it. At the very least, aware of it. We don't have to trade it. Obviously, we've all gotten a bit in pieces and had some fun with it. But it's not so much that we can ignore it. I would say it's important that we don't ignore it. We actually use its sort of presence to understand the market a little bit better, right? I'm going to mention the forward chart here again. I think is really important. We did get up to the 16 point I was talking about here at the trend line. Now, this is, like I've said, my favorite chart so far. Over the last few months here, I would say it's sort of changed very rapidly, right? We're in a very interesting spot now. Now, what exactly is going on and what's going to happen here is sort of the most intriguing point, right? From the technical standpoint, when you look at this, right, what I would say is that because of what we've seen, it's going to continue from here, specifically sort of this trend through here, right? And it's going to continue. And when you start to think about this, this is a lot of points to continue on this trend we've been on, but this has been a month's worth of price action that we've been rallying on, right? From another sort of point of view, maybe from a layman point of view, you see the points being put on here, and it's like, well, there's no way it can continue to go up. You see the correlation to the charts like AMC going up over here. Maybe you attribute it to retail pushing it, right? These sort of things, like I just did this morning with some other tickers that, have come off the lows because they're tied to retail buying back into equity, right? This is a different situation, right? And these are being priced for a very different reason. And it's not easy to be able to figure it out up here, right? And I talked about transitioning, right? So for instance, taking profit here at this trend line today, right? It makes a lot of sense to want to take some of the money here as you get rejected and to now reposition. Again, putting on a new position here is risky, right? But you're alleviating some of that risk because you took profit. You're taking the money home that you've just gained off this rally. Buying back in, right? You're buying more. You need it to go up immediately, right? Or you're just getting stopped out. It's not easy to make the decision to go buy right here at a high, right? And that's always the hardest part about it, other than the fact that you did get to take money home. And so I think this is going to be, it has no right going up tomorrow, I would say, right? You have a big day, you should be taking some profit, maybe a candle similar into here. It's not clear though. It's really not clear though. And when you sort of translate this to the other side of the coin, Tesla was down almost 5.5% today. It's now 5.5% basically by after hours. These things are very opposite from each other. So now the question is it because Tesla already put all the points on and it's doing what these other tickers are and just basically holding value? Yes, it's lost a lot, right? It's lost a lot, but it gained a ton, right? And so it's still holding the value up here. And what is the dynamic here, right? Are we trying to sort of converge back? So for instance, if we look at this entire, I guess we'll just call it a sector, right? With Ford, Tesla, the EVs, the GMs, your automobiles, and this new growth component of EVs. If you put them together, growth put a ton of points on quickly during last year and the beginning of this year. Are they somehow merging back to some sort of mean right now? Is that what we have? Now, we do a comparison between these charts. This is a little different. And there's no real good way to look at it, but it would make that idea make sense. That idea that I just mentioned of them like coming to some sort of mean, sort of averaging together. That's where they are right now. If you look at this here, this is the only way you can actually look at the chart. If you zoom out more, you just can't look at it. But right now they have the exact same percent since basically mid last year, which is about year to date. Not year to date, but from a 1 year perspective, year over year. And so right now they're merged and now going opposite to each other. This is that point of the question becomes, are they somehow coming to a mean, so they should be trending together now, trading at the same pace? Or is this last week or so of price action indicative of what's going to come, which is that they're going to be opposing one another, and that if Ford's going up here, Tesla's coming down, and basically the value to growth dynamic, right? Are we seeing what we've already been seeing in the overall market, that value is outpacing growth, and that they're almost opposites, right? And that portfolios are willing to buy value and hedge it with growth, and vice versa. Are we seeing that here even in this sector, right? And this would be one of our first examples where we can actually look at a chart and see this happening in this phenomenon, right? And it is interesting sort of question to pose because of how well this trade's doing, and sort of, again, the possibilities of points to come. There's a lot of points there available. Tesla's a big name, and so this is an interesting question to pose. So we're going to keep an eye on this idea, maybe do a little bit more of this comparison idea, because I mean, at the end of the day, it comes down to opportunity cost. We want to be in the right ticker, right, at the right time, and be in the thing that's going to obviously give us the most profit within that moment. And right now, we understand the moment pretty well, right? We understand that, hey, Tesla's great, but right now is not the time, right? But we can utilize some of the things that we know to benefit our opportunities elsewhere, right? And so I think this is an interesting idea. It's an interesting graphic to at least look at and to appreciate a little bit what's happening, and to even think about. And it's kind of weird to think about some of these. Obviously, the AMC one and Zoom one is funny because it's thousands of percent. But here, we're talking about 100% between Tesla and Ford, and you might not have realized that from 1 year ago today, Ford is outpacing Tesla. I think that's a weird thing to think about, right? It's a kind of a strange thing to think about. And again, it's why we've taken advantage of this moment, right? And so keep that in mind a little bit. I think it's not something we looked at, and again, sort of lends to why you'd want to be buying Ford over Tesla right now. It just makes technical sense, right? And it makes sense in a lot of different ways, right? And so keep that in mind when we start to look at other tickers. It's really easy to get caught into trading something, right? We've talked about this idea before, but the favoritism or anything like that doesn't really matter when you start to put the prices in there, compare sizes. Obviously, Tesla's bigger, but that's not really the dynamic here, right? And so keep that in mind a little bit. In terms of tickers that we've been looking at, today was very much a take profit day. So in terms of what you see here on the average, I'd say just about every ticker was in a very similar state. But most, if we look at some of the red through here, most are in this 0.5% loss area, so very similar to the market. And most had take profit from yesterday. This does lead to a bit of an interesting day tomorrow, which I do expect to be bid. I think we do have, we do have an interesting day lined up for China tomorrow, and this is where, again, you had a take profit day here. Also, there's news that had just come out about Biden and sort of alleviating some of the China issues with equities on the exchanges, blackouts, and all that. And so it'd be interesting to see the price action here. It's most likely going to open us up higher. Again, it's one of those weird situations where you just kind of what's going to happen. You're going to open higher here, most likely due to China. that did lend to some of the ability to do some things today, or at least be like, okay, I'm okay with some losses here today. I can continue to push through those because I want to continue through the weekend anyway, right? And so I'm very curious. Obviously, here we have not left this area on the Hang Seng, for instance, right? This entire just whatever this is, I have no idea, right? This is just China regulation and God knows what. But we've seen the tickers on the New York Stock Exchange, for instance, just start to catch bid out of here and look pretty good, right? If we just look at the last tail end here, it's looked pretty good. It does dictate our open, so it matters, right? It matters because if there's a chance we're going to gap up, gap down, there's some sort of volatility because of a pre-market action that has nothing to do with us. It's important we know. Corporate tax rates is a pretty big thing. That does influence how China trades because they care very much about those macro influences less than our companies. The tax rate isn't so much of a company thing on the equity market. It is directly a macro function, right? If companies don't have to pay 28%, they pay 15%. Well, that's a different story. Maybe they don't need to make as much in China. So maybe there will be a reaction, right? And so keeping those things in mind for what we might see is important. We'll see because again, there are plenty of there are plenty of tickers that we're looking at that offer potential, and we haven't really. I have not answered this question yet, and the market has no clue still. Right, we have a lot of uncertainty. We've sort of seen the move start, but we need to see some finishing. I'm going to make one last comment here about a sector, which is travel. So travel took profit from its bid day yesterday. I'm very curious to see what we get tomorrow going into the weekend. These have basically held the trends that they're on. We do have things like Win. Someone's honking a horn outside. Shut up. We have things like Win here that took a really deep sort of dive. Now, it's hard to put some of this into understanding. Like, I don't really know where the take profit is comparatively. When you look at that AAL chart, it looks great, right? It's still holding the trend. But then you see something like Win here, and it takes a lot more profit. You look at something like CCL, it's holding the trend line, no problem, right? And so when we start to look across the board and we're looking for things, okay, well then why is Delta down 3.5% today and breaking the trend, right? And so this is again where it's very important that we are choosing the right tickers and then also not reacting on a sector-wide bias, right? And that's sort of what we did with Ford. In these situations, just because one's doing something doesn't mean the other's going to do something, right? And so we can see that Delta here compared to American are two different things. And this is not easy to trade with. And so this is, again, this sector is short-term volatile. They may end up in the same place, but right now they're not doing the same thing. So tomorrow is a whole question mark. They offer a lot of opportunities. Those tickers that pulled back are obviously the ones that offer some sort of convergence back up to where the other tickers are. They definitely offer weekend trades. They definitely offer potential in terms of volatility. You buy them at open, you gain a few percent by Monday. You're talking about almost 100%, right? Just for betting that it wasn't going to continue to come down. And so those trades obviously offer some potential. Going to be looking for those. We'll get hungry for the morning and see if any of those are there. Once we alleviate some of our apes action, right? Once we get out of there, otherwise we'll just let it settle and we'll find out what's going on, see it, watch it. Obviously, we're very long into our value positions. Banks Energy look great. Continue to improve. They don't really take losses that affect us in the long term, just usually short term. And so we continue with that. Really now what we're looking for is, again, this government presence when they change timelines, figures. What are those things going to be? What is the overall effect? And then, of course, looking for all-time highs. We're looking for the all-time highs. Overall, I was pretty happy with some of the tickers that were entered today. Laser Ride, these sort of tickers from the start, even though some of these look very strange, that's still over 6% today. Some of the tickers have been a little difficult because they're all coming off of big breakouts. So most of them are taking profit. It's hard to tell when you should enter those, right? Something that just did 10%, it's going to probably take profit. So then it's like, well, it's already down the day after. Those are never easy, but it's again, it's about going from there. That's part of the step, right? It's always easier if it just continues to go up, right? Then that's easier. Tomorrow we're looking to do probably quite a few entries for some of these tickers we've been looking at, especially over the last 2 days, that are almost identical to the rest of tickers. Most of them I'd even throw the charts on because they're the exact same oil chart, or they're the exact same growth chart, right? Identical to the day, right? And so they're all the same. They all offer the opportunity. We just have to look, right? Um, that's it, folks. It was definitely a fun day. Hey, we'll see what the boys got in store for us. We'll see if AMC opens up at like 100. Either way, just again, be aware, be careful out there. Don't do anything too ridiculous. I will see you guys in the morning. Charts will be up in the morning as well, as always. And so I'll see you then. Enjoy.